please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Their chin after trading starts. Okay, the first rate is about 0.5% down actually, or 0.45 down. So it's almost getting to 10,400 now. Okay, now it's 0.5% down, 52 down, 56 down, 58 down, 58. Okay, maybe there it's finding its feet. So it's 10,400 where the market stopped falling for these few minutes. The Sensex is down 163. So clearly the actual opening is worse than the pre-opening, but not as bad as the SGX Nifty. The Nifty Bank is getting very, very bad. It's about almost 0.8 down. Okay, 0.87 down, 0.9 down almost. So 210 gone on the Nifty Bank. I always thought that the PNB fraud hid the real problem in the banking stocks, which is that very severe circular from the Reserve Bank, which is going to mean red on most of the balance sheets where the fourth quarter numbers come. But at the moment, let's worry about the metals. Hindalco down 2.6, Vedanta down 1.5. And Tata Steel down 1.4. That's the Trump impact. Aurobindo has a problem of its own, and that's the worst performing stock in the Nifty, down almost 3%. After those details of the US FDA observations, some of which were a little startling and scary. Other stocks that are not doing well, Tata Motors expectedly so, the numbers were not very exciting. And then come the banking stocks. Yes Bank is the one that's taking it on the chin, 1.6 down. And then comes SBI, which is down 1%. Even M&M not doing too well, despite good numbers. M&M, Coal India again down. It has reasons too. The numbers were not very good. The dispatch numbers in particular. Ambuja Cement, Kotak Bank, Ultratech Cement. So cement banks, all of them in the red. At the moment now, the Nifty has stopped falling, and the Nifty Bank as well just pulled back a wee bit. But I can't see any green on the screen. Okay, there are about 3 or 4 stocks, largely IT. TCS is in the green. Dr. Reddy's is in the green. Infosys is in the green. That's it. IOC, if you please.
Okay, well, similar case for the mid-caps actually, down about 0.5%. The market breadth is quite weak, more than 1,000 stocks on the declining side. You have a lot of stocks hitting new 52-week lows today. Names like PFC, Bank of India, Bajaj Hindustan from the sugar space, Vakrangi, all hitting 52-week lows. And the metal space is also under pressure in the broader market. So SAIL is down almost 3%. You have a whole host of these, SAIL, JSW Steel as well, Nalco too follows suit, so down about 2% a piece over there. Whole host of these PSU banks are down and out. Union Bank is down almost 3%. Motherson Sumi has been struggling for a while, although it did make an attempt to recover. It's down once again, another 2.5 to 3%. And if you look at some of the odd gainers, you have TVS Motor, of course, good set of numbers the company has reported. Dilip Buildcon has exceeded its order inflow guidance for the full year, so the street likes that. And you have something like a VST Tillers and Tractors that has reported good numbers. But otherwise, the mood is sour, no two ways about that. The Sensex now almost advancing towards a 200-point cut.
And you know what, Tata Motors is making the lows of the morning, and while you know the JLR sales did look weak, what I think we haven't really taken note of is the Donald Trump tweet on European cars as well. When he's talking about, you know, if the trade war escalates, in that case, you know, he said that the European cars come into US without any duty, and that's and our cars don't sell there. And JLR right now actually is a European company, right? And the US is actually the biggest market for Jaguar Land Rover, and that's why I think while other sales numbers look good, Tata Motors sales also look weak, and the fact that you have you know, an issue like this where there could be some duty, so that's why I think that stock is clearly right now down a bit. But from the index, of course, the other stock, which is Aurobindo Pharma, so both these stocks looking weak. Ashwini, your thoughts on market opening and any interesting stock that you know, is available for trade now?
See, I think you are getting a fairly decent pullback, and this pullback should be used to sell into the Bank Nifty. And overall, on the upside, you hardly have some cash stocks which are doing well, the odd, you know, fertilizer stock or a Thomas Cook. But other than that, I think the weak stocks are basically the banks, where you know, 24,800 is holding on by the skin of its teeth. But chances are this will fail. The big trade on the downside, I think, is the metals. So JSW Steel, SAIL, all of these stocks, Hindalco, etc., they should face selling. Also, things like Motherson Sumi, which are, you know, quote-unquote European exporters, they could face the heat today.
Okay. Are you already short on the Nifty and Nifty Bank, or will you short now that there is a bounce back, Ashwini?
Yeah, this is the place to short because you're getting a bounce back from the gap down. It's about a 50% sort of retracement. So this is a fairly decent place to short. Plus, Bank Nifty has gotten above 24,800, which is unlikely to hold. So my sense is that these are good levels to go short.
Okay, Fortis Healthcare is another stock in focus. It's down another 3%. It's been very, very volatile, one up day, one down day. But today, big selling there and volumes are also quite high. Ashwini, what would the big call for the day be?
See, the big call is that metals and these global auto plays, they are the, today's short. But overall, whatever took the market down lower, basically the financials, they should continue to head down.
Okay, let's just pull out the intraday chart of Jindal Steel and Power. That stock right now is making lows of the morning. Ashwini, thoughts on this one? Any trade here?
Metals are going to have a bad day, so JSPL or JSW, all of these guys should get sold into.
Mitesh, anything on your radar now, short or long?
Mitesh?
Bank Nifty remains, Bank Nifty remains clearly one idea to, possibly take a short exposure given that 24,800 on the spot Bank Nifty at least is not holding, and I'll keep a stop just about 24,850, just about the day's high. But that about on stock side, I think JSW Steel, HUL and ITC, and HUL and ITC both are also index heavyweights. I think both of them are looking weak on the intraday chart, so I think that could possibly lead to Nifty getting lower towards the end of the day.
Actually, Sudarshan, today, as of now, the Nifty is weaker than the Nifty Bank actually. What are your trades now?
Well, the trades are to be short in the Nifty. We are short from last week, and that short position continues. For someone who's taking a fresh position today, buy 10,400 put options and expect volatility. Markets can go up and down both, but look to 10,000. So today's morning trade is to go short using 10,400 puts.
Okay. Axis and ICICI are surprisingly in the green in the last few seconds actually. I mean, I don't know if it's just short covering or whether people there's an exhaustion of selling, but both those stocks, importantly, Nifty Bank.
I think Aurobindo Pharma right now is getting a bit derated because, after that initial news, at IFL conference they spoke about, that observations are not really big and that they'll be sorted out. There was minor recovery that's been sold into. I think the market really didn't like the kind of observations, and some of them are really scary. So that's the one which is, and because it has had a rally before that, that's the one where you're seeing quite a bit of punishment at this point in time. But we'll thank our technical experts. Thanks a lot for joining us. Of course, we'll talk to you at around 10 a.m. Udayan, before we thank you, just a couple of more thoughts. On pharma in particular, we have started to see fresh round of bad news for a couple of large companies. Your thoughts on whether the counter trend rally is over here?
It's just not bottoming out, Anuj, the sector. Every time there's a bit of a pullback rally in some of these pharmaceutical names, we jump to conclude that maybe the sector has bottomed out. But out comes fresh bad news once again, sometimes on Reddy, sometimes on Sun, sometimes on Aurobindo, and the sector gets knocked back once again. I think if this is a bottom formation process, it's going to be a very violent one. And I think the recent bit of news only reconfirms that this is going to be an issue, but these observations from the US FDA for some time to come. And I don't think even long-term investors will have the patience to buy and wait out through this period of volatility. So I think we should hunker down and say that of the two export legs, IT and pharma, which had been underperforming for the last 3 years, pharma still needs some time. And if you have to play exports, you probably are better off with IT than with pharma for the moment. Okay, so the little bit of green that we saw in Axis and ICICI again getting sold into, a final question on the banking stocks. Udayan, there was actually a killer circular from the Reserve Bank on February 12th, just before the fraud announcement by Punjab National Bank, which is going to mean that everything that they call restructured is now going to be NPA practically. I mean, that line gets obliterated, and even future recognition is going to be has to be fairly quick. You think there's more to go, or have even the ICICIs and the Axis
more selling to see?
I think the results might be quite ugly through the next few quarters, Lata, because of the reason you mentioned. I'm also quite worried about it, this recognition, and I think it's a fair call that over the next few quarters, NPA recognition and therefore a lot of provisioning might actually come out into the open. So I think this might actually materially dent FY19 earnings if banks and metals, banks for the reason that you mentioned, and metals because of the global turbulence we are seeing, actually take away, then we've got a problem on our hands, because these are two very major contributors to earnings for next year. And I'd like to point out one more thing about this whole banking mess. I mean, enough has been said about PSU banks and their distress, but I think it might have a couple of collateral dimensions in terms of damage. One is that you're already seeing trade financing squeeze out because of the PNB problem. You don't want a situation right now where you see exports fall even further because of a clampdown on trade financing, and even the incipient or slightly nascent kind of recovery in credit growth to actually get stalled because people get very shy of giving loans. That's a real threat that we face at this point in time. The other worry which I have is that the government has just started giving out money, recapitalization money to the banks, and I think it's a fair surmise that stung by this, they will not have the political will to go out and give out more money. It wouldn't surprise me at all if this whole recap exercise actually gets stalled and a lot of the banks don't get the money that they were looking for, which is a big headwind for credit growth and per se growth once again. So be aware of some of these tertiary kind of fallouts from the mess that we are witnessing.
All right, Udin, thanks a lot for joining us. The market is now at the low point, closer to the low point of trade. The Nifty now almost a 75-point cut. Let's invite our market master for the day, Pramod Gubbi, the head of equities at Ambit Capital, joins into our discussion. Pramod, hi, good morning. A lot of market watchers fear that because of what's happening across the world, this could be the beginning of the end of America's participation in international trade. It may be too early to call that, but if indeed it is, what kind of ramifications do you see for a market like India?
I think it is not. It's not going to be good for anyone, for that matter. If the whole idea of globalization over the last 20 years actually resulted in reduced costs globally, keeping inflation, and has witnessed the biggest bond rally across the world. And if you're reversing that whole process, of course, every other benefit that we've seen through that will also have to be reversed, which isn't particularly great for anybody, including that in India. But having said that, I wouldn't go too far. We've seen this in the past. We've had as recently as in 2002, when similar tariffs were imposed, only to be reversed, but not before the markets and both the equity and the currency markets took a beating.
Okay. Good morning, Pramod. Good to have you with us. Well, you know, things don't really unravel so much. When we had Brexit, or before that Grexit, there were fears that European Union would unravel. It didn't happen that way. You know, at some point, politicians and political economies realize that you can't bleed yourself too much. So has the market reacted enough for Trump, and it will not really be that bad as we get by?
Well, I mean, how does one decide what is enough, right? Because the last time around, the incident I was referring to in 2002, post the steel tariffs being imposed, I think the S&P fell something like 25–30%. So, so would it take that much of a fall for the leaders, the political leaders, to realize that this is a folly and undo the wrong? I don't think you know, we'll need that much. But having said that, you know, we are living in sort of unprecedented times, unprecedented actions. So rather than look at history repeating itself, we'd watch every move very closely and make our own calls.
Okay, by the way, PSU banks are recovering, which is interesting. I mean, if you see the stocks, some of them, for example, you know, led of course by SBI, but PNB, Bank of Baroda, Indian Bank. So some of these stocks are trying. In fact, a couple of them are already into the green right now. So it will be interesting to see how some of these stocks move from here. Pramod, good morning. So this whole banking mess, and of course now we have global Qs as well. Do you think this has the sort of you know, the potential cocktail for Indian markets to have a big correction this year? Say something like, we've already seen about almost 8 to 9%, but says in the vicinity of 15–16%.
Yeah, I mean, the markets, like we've been discussing, will continue to be driven by global flows. Now, whether to that this whole mess of the banking situation will add local woes as well, quite possible. But more importantly, I think we'll have to see the impact on the economy itself. Clearly, the health of the banking system is imperative for the pickup in what we have seen already an early signs of an economic recovery. But in terms of capex-led investment cycle picking up, we need the banking system to be in full strength to support that sort of a recovery. So any sort of impact on the bank's balance sheets and their ability to support this economic growth will clearly affect several aspects of the economy, and which sooner or later will trickle into the markets and its earnings expectations. So clearly we're not doing our bit in terms of helping the local market despite adverse global cues.
Would you increase your allocation to some of the domestic oriented pockets that are doing well so far, Pramod? The two-wheeler names, the tractor makers. Has the time come to put more money to work here?
Yeah, absolutely. I think we've been highlighting, at least in the run-up to the election, we've seen this in the past as well. You know, the government is clearly loosening its purse strings. There's going to be significant increase in spending, particularly in development programs in rural areas. So consumption as a theme across both staples and discretionary will be right up the order when you write down the sector allocations in India. And also, I think some of the private sector banks, particularly those with strong CASA and an ability to keep a hold on their cost of funding, should benefit as interest rates rise, and you know, they're able to capture a significant part of the increase in yields in the form of increased spreads and margins and so on. So I think consumption in private sector banks should be very good sectors to allocate capital this year.
Okay. Well, Pramod, generally how are you looking at markets and earnings at this point in time? We've seen a fairly decent fall, probably 8% from recent highs in stock prices at the index level. And yet we've seen fairly good auto sales numbers for one. So is it that you're confident of earnings? Is this a place at which you would buy betting on growth?
Yeah, I'm sure there is a price to everything. But having said that, I think we've seen almost 2-3 years of the markets rallying without much to show in terms of earnings. So I guess we will need a period of time when earnings will catch up without material contribution in terms of the multiples to contribute to the stock prices. So I guess I wouldn't be surprised if this is a year where we see earnings continue to pick up, after having seen almost 3-4 years of non-existent earnings growth, but the markets don't go anywhere. So we are quite confident. We've already seen signs of an earnings recovery in the recent results, and it's only going to pick up, particularly in sectors that I just talked about, over the next 3 to 4 quarters as the economy itself picks up, but may not necessarily translate into stock market gains. But yes, if the market continues to correct at this pace, there will be a time when valuations on balance with the earnings prospects will become attractive. My sense is somewhere between 5 and 10% below from these levels.
Okay. You were just talking to Moshe Khatri, who's tracked the Indian IT for a really long time. He was making a point that companies are making digital transition, and even some of the legacy businesses have started to do well. Some of that is played out in the way stocks have moved. But your thoughts on Indian IT?
Yeah, I think definitely we've been highlighting the points about both the pickup in global IT spend thanks to the sort of stimulus that the US government has given in the form of tax cuts and so on. But also in general, as the interest rate cycle picks up, banks and financial services, which are big spenders on IT, are likely to do well, and most likely will allocate some of those profits into investments in IT, which augurs well from a macro standpoint. But having said that, I think the real thing that was hurting Indian IT was the disruptions in the IT consumption pattern by global corporates, and the adjustment that the Indian IT services companies had to make in terms of their own capabilities in these areas. And I think we've had a period of 3-4 years of investments, and at least a couple of them are in a position to actually put those capabilities into use and regain some of the lost market share. So on a demand perspective, I think it augurs well for IT. Now, whether the sort of recent rally that we've seen factors in most of this, I think there's a little more to go in terms of valuations, but more importantly, we'll see earnings growth picking up. On top of that, with interest rates going up in the US, if the dollar also rallies, this could be a interesting tailwind for the sector, which could mean earnings could go north of 15% in terms of growth over the next 12 to 24 months.
Okay. Oh, well, thank you very much, Pramod Gubbi. It's a pleasure speaking with you. Thank you very much for joining us